Barring any unanticipated shocks, inflation is projected to gradually trend downwards but remain above the upper band of 8% plus or minus 2 until the end of 2025. That's according to the May 2023 Monetary Policy Report by the Bank of Ghana. Here's more.
According to the report, risks to the inflation outlook are fairly tilted to the downside, supported by the relative stability in the exchange rate, reduction in ex-pump petroleum prices, alongside base drift effects. This could mute the upward adjustment in administrative prices. Given these considerations, the Monetary Policy Committee decided to maintain the monetary policy rate at 29.5% in May. Headline inflation had already declined significantly by 12.9% between December 2022 and April 2023. However, it surged slightly to 42.2% in May. But the Bank of Ghana believes its latest forecast suggests a disinflationary path on the horizon, supported by the monetary policy tightening, relatively exchange rate stability, and some favorable base drift effects.
All right, joining us, research lead at GCB Capital, Courage Botti, with some analysis on this. Courage, what do you make of the central bank's forecast?
Well, it is in order, actually. We've seen inflation trending down since the start of the year. The distortion in May, I think, largely is due to the price effect of the recent tariff adjustments and then the revenue interventions, really. They will have a lag impact, and they have passed through. Maybe for June, July could lead to even slightly higher inflation again. But ultimately, it should resume a downturn. And the projection from my end was we could end the year around 27 or so percent levels, which is not too far from what the Bank of Ghana is looking at, 25. It will get there. The thing is, as the base effect decay, the favorable base will decay, you will begin to see maybe slower movement in inflation. So it could get into the under 20% levels, maybe towards the fourth quarter of 2024, thereabout, and would slow down from there on until probably we get back to the single digits or the target band sometime going on. But all these depends on whether there are no more exogenous shocks to inflation between now and that time. Because what it looks like now and then the trajectory of event could go down, and then the pace slows down maybe sometime in 2024 when the base effect would have decayed.
Does this give any indication how the central bank will approach its decision on the policy rate, as some analysts anticipate a policy rate hike following the surprise uptick we saw in May?
And no, I don't think the central bank is reacting to the month-by-month data, or if you like, the one-off occurrences, really. There is a reason to the May jump. The question will be, how endemic is this? To what extent will it remain a risk going forward? And what will be the time horizon for that? I don't think it's a shock that will persist for a long time. I think it would have maybe a temporal effect, most likely over the next 2 or maximum 3 months, and then we'll see a resumption and a declining trend. So they won't react to the short-term spares, really. They would want to look at it over a longer term period. The jump in May was just 1%, really, and then their model will be estimating what it could be in June and July. If the threat is not so significant, remember we are in an era of slow growth. Unemployment is still on the rise and all of that. And the policy rate is very high at 29.5 or so, really. So the immediate edge will not be to increase rate. It will be to look at what the trajectory of inflation is and what the near term and maybe a middle term outlook be. And that is what determines whether they should hike or not. And I will expect them to be measured in their approach so as we do not stifle growth even further.
Meantime, impressive first quarter GDP numbers, a growth of 4.2%, but some analysts concerned we are not seeing growth where it really matters, which is industry.
Yes, that's true. I mean, you saw the industrial numbers. Construction contracted We saw the mining and quarry sector contract, and those are reflection of things happening in our economy, really. The government is not paying contractors, so much build up in arrears, and things like that. New projects are not taking up because you are under austerity. Yes, definitely you expect contraction in those areas. In the areas of oil and gas and the extractive industry in general, I think it's particularly driven by the oil sector where the Jubilee fields are not operating at maximum capacity because of underinvestment issues and operational challenges and things related, really. So no surprises there. I think the services sector, as expected, is leading the growth charge, really. And agri sector also same. And that is where people are dominantly playing, and that is where the private sector is doing a lot in that side of things. Construction, government plays a big role in that side, even if private sector also does a lot there. The mining, and these are heavily weighted components in the GDP computation, really. So I guess those are why we are seeing. Probably we could have seen sharper growth or more robust growth than the 4.2 that came out before the contraction in the industrial sector. And it's something that probably could continue for maybe the next few quarters because of the trajectory, really. We are having to consolidate, and so expenditures in critical areas that can be growth enhancing will be curtailed in the meantime, which will mean that we could see contraction in that sector maybe for a few more quarters before things turn around.
Do the numbers back claims of economic recovery?
Well, relative to, I think, the first quarter numbers, really, I think this is a slight improvement. So it is not as dire as probably we thought. And I think the 4.2 number is actually a surprise relative to the kind of environment we are in now. The expectation was that probably we could see even much slower growth than it came out to be. So yeah, to that extent, it means we are in a phase where we may not be improving so much, but we are not also worsening off so much, really. 4.2 compares favorably to immediately quarter 4, 3.7. So that is some improvement, but I think the crust of the issues are ahead of us. The program has just started. Consolidation will now be monitored in detail and then enforced properly, and that is the reviews and the subsequent disbursements depend on our performance under the program. So this is now where you expect a lot more tightening, and then the effect it will have on growth through industry and the many other sectors would be impacted, really. So I think this is a good number. It's quite impressive relative to what the expectation would have been. But then we would have to look at the coming quarters to see the full impact of the consolidation we are seeing.
Is it sustainable, this growth we're seeing in the first quarter?
That's the point I'm making, that the consolidation will bite more from the second, third quarters going, because the program has just started. And yes, we might say we started this from the first quarter of the year or the beginning of this year. The budget assumed the IMF and all of that. But what has been the credibility of our own fiscal agenda without the IMF? And we are yet to see the numbers to see if we were sticking to the agenda from the first and second quarters, really. But now that the program is in place, you will see a lot more tightening of the fiscal position. Debt exchange will bite. You will see it reflecting the loan portfolio of banks, lending to the private sector and things like that. And it is when those are fully reflected that we might begin to see a slowdown in growth, really. It's not for nothing that the IMF is projecting 1.6% growth for 2023. The government themselves do not have such a bullish expectation for growth. So the impact of all the hardship we are seeing now will begin to reflect, I think, going forward. So this might probably be a bigger or a brighter picture than things are. And as we go along, we will see the full picture of it.
Courage Boti, a research lead at GCB Capital, thank you so much for speaking with us. While manufacturers are calling on government to prioritize their needs as new data form, the Ghana Statistical Service shows a 3.2% contraction of the industrial sector in the first quarter of this year. Samuel Agui is Executive Secretary of the Food and Beverages Association of Ghana. He joins me to react to the latest figures. So we know that industry contracted by 3.2%, but manufacturing subsector 2.5%. So what we're seeing is evident of the challenges faced by industry, right? Or which you guys have been calling for government intervention for some time now.
Yeah, thank you very much, and good afternoon to all your listeners. In fact, this is what we've been saying all along, that the policy direction, if not taken care of, will rather see industry going down in a very bad way if it comes to growth. And the figures as published and really indicate my call over the months and that the government need to do something to look at it. Unfortunately, this has not been done. And as we see the inflation numbers coming down, we expect that industry will be the one to drive this economy to where it's supposed to be. So if industry is going down, then economy is also going down, because I can't see how your industry will fail. And then on the other side, you say the economy is doing well, because the private sector and the industry aspect of it is what drives the nation forward. So that's why I've been saying that if the industry fails, then government also fails in this quest to ensure that there's an employment in the system and all that. Because if you look at the trend and the downwards trend of the employment, it has gone high, but government cannot employ. But so you create the atmosphere for the private sector to encourage them to employ more. If you have to give other incentives, then, as I said, you need to benchmark some of these incentives that you give to industry for them to be able to also capture certain areas into their factor, and then business will do well, and then business and manufacturing will also grow. But if we are not seeing all these things happening, then of course we should be seeing further downward, even though we'll be seeing small-scale industries and other people coming on board in the manufacturing area. But then this will not warrant the growth that we want to see. So government really need to, as it were, bring stakeholders and industry on board, take industry very seriously, so that at least whatever they are doing, if they are running at a loss, you need to look at it, because for you to go forward, you need to carry the burden of industry with you. We've been saying electricity cost is so high, water processing for using into the manufacturing area is also very high. And therefore, we need to consider a separate tariffs for industry so that they can break even in the losses that they are making. But unfortunately, we've been talking and government is not listening. But if they have to, then of course, these are the areas that they need to look at. And then we look also at some of the taxes that has been imposed. We need to look at all these things. I've been saying that the taxes that we have been charging, bring all the taxes that we have in this country, put it on the table, and let us look at which ones we can take them off or suspend them at this time. Because this is a time that we need the country to grow, to at least overlook, or in a better way, for us to be able to overcome.
Samuel Agui is frozen there. We'll try and reconnect with him, but we're making the point about industry's performance based on the first quarter GDP numbers released by the Ghana Statistical Service. Industry contracted by 3.2%, even though the economy grew by 4.2%. If you take a look at manufacturing in itself, it contracted by 2.5%. And the argument is that even though services have driven the growth that we have seen in the first 3 months of the year, where it really matters, we are not seeing growth, which is industry, which is manufacturing, which has the potential to create jobs. Samuel Agri is back with us. Just so you conclude on the point you are making, Samuel.
Thank you. So, as I was saying, we need government to come on board to carry us behind the back. We should be behind every step that government takes for us to ensure that business and manufacturing grow in this area. Because if you are not careful, all the incentives or the policy that you have brought together to ensure that business will grow, it's not growing. And we are telling you there are so many policy challenges that we are facing. So therefore, we need to look at it again. But if they are listening, then of course, this is the time and a weakening area, because as you see the figures, that industry is going down. We should be growing at a pace of about 5% in a year. Unfortunately, we are going down by 4.2%, and this should not be the case. So government really need to look at the figures they themselves have produced for us to be able to come on board. If we look at the IMF directives, we are supposed to grow as a country. We are not supposed to kill our industries.
Right.
But what they have done is going to rather give industry more burden, because if you are not careful, come July, end of July, we'll really see the figures on the table. That will tell us whether we are going to make it or not. As it is now, what industry is doing is that most of us are just taking the approach of let's wait and see what will happen. So therefore, they are taking the pain in investing their money in this area, just to wait to see what will happen, whether in the next quarter things will change or not. But as it is now, any policy that you bring on board, it takes time for you to see the real effect. And I'm seeing by July, we are going to face more catastrophic indices if we are not careful. So we need quickly to take a direction or make a U-turn in certain areas so that we can really help industry to beat the lead in this economy. Otherwise, I'm afraid we are going to see a further contraction of industry.
My last question, well, if you speak to the government, they would say these things, the new taxes, the utility tariff hikes, all of that, they're important to create the stability that we need for manufacturers to thrive. But just one quick point about the producer price index, which was also released by the Ghana Statistical Service, which shows that it has dropped to 30.3%. Isn't that a positive sign?
For us, we would love to see a single digit in whatever that we do. This will give you strong standing as a manufacturer. And so therefore you see that people can also then spend money in whatever you are producing. Unfortunately, if we are producing and the people are not able to spend the money that they're supposed to, then what happens to what you are producing? So then your scale of production will certainly go down, because as you are producing and no one is buying, then you have to really look at all the projections that you have done. And if that one comes down and you need to cut your production, obviously it will be because people cannot be they will not be able to spend in that direction. So some time passed, I told government, if we want the economy to grow, we need not to put or impose certain taxes in the quest of raising revenue to develop the country. If things are cheaper, people tend up to spend more and import more, and government will then make the money that you want in the revenue. It's not always that when you increase, people will then have to spend and then you make the money that you want. You increase and then the growth also goes down.
Okay.
So we need to look at certain areas where we can really bring down the taxes for consumers to be able to raise enough spending money so that they can spend for government to make that money. Otherwise, I don't see us going forward as going in this sector at all, because the figures, as we see, is coming down. But when you go on the ground, you really ask yourself exactly what is happening. Because if the figures are good, why is it that we are still suffering on the ground? So we need to look at the two and see whether the reportage that we are making are truly reflecting what is actually happening on the ground. Because when you go out there and you ask people whether they are able to spend, they will tell you things are very expensive and they are not able to.
All right.
Because for us, doing the import, we need to look at the cedi, the strength of the cedi against the dollar. Fortunately, the cedi seems to be going back, gaining its strength.
All right.
It's going on a slower rate. But we need to do something to get the growth going.
All right. Samuel, I agree. I appreciate your time. Executive Secretary, Food and Beverages Association of Ghana. Thank you so much. Well, let's move on to another top story. Telecom firm Airtel Tigo has rebranded as AT. An SMS to all customers today reads, quote, "Dear customer, we are happy to announce to you that Airtel Tigo is now AT. So going forward, call us AT. Life is simple." Samuel Douna is Vice Dean, spokesperson for the Network of Communication Reporters, who joins me on Zoom to discuss this. I know you have been following this story closely. What's in the name? What more do we know about this rebrand? What does it change about the company going forward?
Thank you very much, Daryl, and good afternoon to your viewers. Yeah, I mean, as you can see, Airtel A, Tigo T. I mean, so that's just that's just what it is. I mean, a colleague of mine suggested that probably they should have added an O because we from where we sit, we have the understanding that an investor is coming, and the investor is attached to telecom giant Oracle, which is at the moment, doing some improvements on the Airtel Tigo network, because of which the top management at Airtel Tigo have told me that exciting days are ahead. If you give them a few weeks, we are going to see what the rebranding will actually mean to us. So as of now, they are saying it's early days yet, but in a few weeks' time, we should come back and ask them the question again, and they will have fantastic and wonderful stories to tell us about what the rebranding means for customers, as it were.
Well, we expect a formal announcement today somewhat, but remind me again, who are the owners of AT or Airtel, if you like, following the exit of Bharti Airtel and Millicom? Any news on the transfer of shares to potential investors?
All right, so we know that in 2021, when Bharti and Millicom left this country, all the shares were transferred to the government, of course, with all the liabilities, very, very heavy liabilities. Everything was transferred to the government of Ghana for $1, of course. I mean, $1 is just a stated price. But we know, of course, and even the two companies, when they left, each of them reported to their shareholders that they walked away with $25 million each. The clarity of that, we are yet to understand, because what we know is that they left this country and the government took over all the shares at $1. So as of now, the government is still the owner of the company, but we know that a transfer still is going on as of now. It still is going on. What I know, what we can report is that the company is being sold to what we call a blue blood, company from the UK, which is not necessarily, which doesn't necessarily have an experience in the telecoms industry, but they are very, very big when it comes to investment, because they are a private equity company, and mainstay has been in the mining sector and the finance sector. But of course, like I said, they have attached to themselves a telecom giant, which is Oracle, and so together they are doing it. And I know there is a young Ghanaian businessman who is fronting for them. The names are flying around. We will get to the names at the right time, but this is what we know so far. So government is doing, as of now, the deal is going on, and at the right time, the shareholding structure will be announced. But Daryl, remember that prior to all this, Glo migrated all their customers, 800 and something thousand customers, to Airtel Tigo.
Exactly.
In what they said, a national roaming deal, but we all now know that it's actually a measure, because now Glo is no more functional, and all their customers who use 023 numbers are now using Airtel Tigo scratch cards, Airtel Tigo reload cards, and everything, Airtel Tigo data and everything. So it's clearly a measure. So we are expecting that the owners of Glo will have some shares in the new 80 company that is now. So we are expecting that there will shareholders from Glo, there will then be some shareholders from the new company that is buying, which has joined Oracle. And of course, we are also expecting government to still hold some interest in there. So we are yet to know. The government will, at some point, they will come clear and tell us exactly what the shareholding structure looks like.
Yeah, but it's a pretty tough terrain, isn't it? A market dominated by MTN. We're hearing some news about Vodafone speculations going on about their future. How can AT survive this market, thrive in this market?
Well, I mean, Daryl, at the end of the day, it has to be network quality service. Look, everything has to do with service. What are you bringing on board? Because just a mere change of name doesn't make subscribers say that we are going to sign on. For instance, let me give you an example. For instance, MTN was named SMP, which then meant that the regulator is going to, intervene, implement certain regulatory interventions, just so that to give the others an opportunity to also grow. NCA is telling us that by the implementation of some of the rules, the other telcos have been able to save as much as $86.6 million Ghana cedis. I mean, in terms of what they would have paid to MTN, if not for the SMP intervention. So here we are, but are we seeing from the time SMP was implemented 3 years ago till now, the numbers even show that MTN has even grown further, and the others have dwindled further. As I'm talking to you now, Airtel Tigo was at the time about 19% market share. As I'm talking today, they are about 14-point-something percent.
Okay.
Vodafone was about, now they are 18%. So it is about what are you offering the customer? The fact that somebody has been made SMP and you have been given an opportunity to grow, does not necessarily mean that the subscriber is going to sign on to your network. The subscriber is going to sign on to what you offer.
Okay.
What can you offer the subscriber? That is the name of the game right now. So if they are not giving if the telcos are not giving the necessary offerings, that will then attract people. Change of name and naming of SMP will not necessarily change the market share structure. So now we are saying that the SMP thing was to correct the imbalance in the market. The imbalance is not being corrected at all. Daryl,
all right.
If you look at the number.
We've got to go. Thank you so much, Samuel Dowuna, Vice Dean, Network of Communication Reporters. Appreciate your analysis. And that's our program this afternoon. Thanks for watching. More news, as always, on our website, myjoyonline.com/business. Dangote on how his AU passport is ineffective even with his money. You can read more about that and other stories on our news feed, myjoyonline.com/business. Thanks for watching, everyone. We will be back same time tomorrow.